Right, let's get going. Oh, something funny's going on with the.
Syns du det er stress å selge bil? Det blir
Yeah,
stress.
oh, there's got to be a setting, has to be a setting that I can press that stops um, YouTube opening up a screen. Must be, must be. Right, okay. Uh, let's get going. Are we on YouTube, are we? Yeah, I think we are, yeah. Let's get going. So this morning, everyone, to anyone that's on. Right, so we're back again. Right, let's have a little quick look at where we are with so far as this morning's ASX trades. We didn't want it. We've made 2.62% this morning on the ASX. And we've got a runner still running, maybe. Yes, we have. So we've got a runner running. This was a 14 pip stop, and we're going to move stop to entry now. So move your stops to entry, guys, for the guys that were trading with me this morning. And let's just put these up here. Yeah, for the guys that were trading with me this morning, um, yeah. And let's see if we can. Let's see if the market can just die away. It's close now, of course, but you often on the EOQ, we often get a drift and the market can come down further. So worst case scenario, we've made 2.62%. Best case scenario, we're going to make over 4%. So let's wait and see what we get. A quick scoot around today, the daily edge today. Again, we're focusing on the FTSE and the DAX on the open plus gold. So there we are. Uh, hit the closing gap yesterday plus the high target today. We're going to go for the gap and we're going to go for C-ball ideally, and we're then going to sell into a bull market later on this afternoon. We'll be live. What time are we live, guys? Is it 3:30?
Yeah, I think it is, Steve.
Yeah. All right. Cheers. Yeah, thank you. Yeah, 3:30. And then we're going to be looking for the EOQ collapse, hopefully. And we'll be looking for somewhere between 2 to 5% for that. And then at 8:30, we are going, actually, it says Tuesday 8:30, but we're actually live streaming at 8 o'clock. So we'll or I'll change the invites. It's 8 o'clock. So we're trading from 8 o'clock in the last hour, and we'll be looking to do the EOQ on the Dow and the DAX and anything else we can get our hands on into the last witching hour for EOQ, triple witching. So busy day, busy day. DAX, well, interesting enough, we've had retail sales expected 2.9, 1.87, so a bit dour on the Dow, and we should see a spike down on the Dow sorry, not Dow, on the DAX for that. UK GDP 1.2, actual 1.4, so a little bit up on that. But today is going to be all really around end of quarter settling, rebalancing, etc. So just put that daily edge out the way. Uh, just to make sure that you've got a complete risk-free environment there, and we'll have a very quick scoot round. So we were going short on crude. We have an order on crude at 62.77. We're looking at this area here to be broken out of. When the markets come down in this fashion, what happens? We go sideways. If we do go sideways, the market then usually breaks down in the direction that it entered this confluence and a breakdown. So what we're looking for is a breakdown of the market, looking for nearly a 2% trade. And on the Forex, we put this trade on this morning live. For people who are just coming into the room, we were live from 5:45 this morning, trading the ASX EOQ. We're in this market now, going for a cheeky one-to-one. I'm going to put the alerts a bit further down here, and we'll put a stop to entry when we get alerted off here. So going for a cheeky 1% there. With regard to let's go and look at that DAX. With regard to gold, we've had 4 trades on gold today, 3 stop to entries and 1 2%er. And we'll look at gold as well. Are we in gold at all? I'm just looking. Yes, we are in gold already. So yeah, we're already in gold. We'll go and look at gold after the open. What's this? Why have I got? What's going on here? I think the bot's gone doolally. What's going on here? Has anyone got the? It's not displaying correctly. What the heck's going on? Anyone else got the bots on? This is clearly completely wrong on here. The actual bot position is 3868. 3868, which is 3868, which is somewhere up here. So IG performing like they normally do, pretty poor with displays. Sometimes it's just throw the dice really sometimes. Right, let's forget gold. I don't know what's happening with gold there with regard to the display of the bots. So we've had what we're looking at is a potential gap trade here on the DAX is a bigger picture on the DAX here, and we're coming below the close. Ideally, I would like to buy off Camarilla breakout short. Market's bullish. There's a 200 EMA here for the DAX. We want the first 5 minutes of action, really. Let's have a look at the DAX. The FTSE's really, really close. We need to be... I'm running behind a little bit here, aren't we? We need to be 34 pips away from that to get a decent trade. And we're kind of not. I'll leave it up to you guys in the room whether you want to do your 1 minute frackers to try and close that gap today. While we're live and got lots in the room, then that's going to be a toughie, but that is looking highly likely to close. Can we get in a very cheeky fast trade in here? 15, 15, that needs to be 13. No, it isn't. So I think that gap's probably going to close, but we don't have a one-to-one risk reward. If the market comes down lower, and I'd like it to come down to CBOS, close that gap and then come down towards CBOS, and we will get a trade out there. But that gap is looking likely to close. I'm just looking here. We don't really have a one-to-one, but it's probably going to do its thing. If you want to do the 1 minute frackers, then you can do that. Hi, Kevin. Nice to see you. So perfect storm is let's not close this gap. Let's come all the way down to Camarilla breakout short, put in a 15-minute bar reversal or a 5-minute fractal and close that gap. It's just too close at the moment with me trying to cover multiple sites. The FTSE is just, again, oh yes, remind me in the room, guys, about gold and the analysis we did with gold yesterday. And I think that was with, was it Rory? We did that with all the levels. It was, wasn't it, Rory? Oh, his mic's off. Right. When we'll look at that analysis. So we've got a closing gap here on the FTSE to have a go at, and you can see the market is coming right down into this 38.2 Fibon on a retrace daily low. That would be a really nice place to buy. The FTSE today, it's EOQ. We have what generally happens on the FTSE on the end of quarter triple witching is that we get a big rebalancing. A lot of people are taking profits, and we get a big market sell-off. We are expecting the market to do a short squeeze. In other words, we're wanting the market to go all the way up. ATR today on the FTSE is 9. I'm just looking to see if we can get a cheeky one here to close that gap. I think we can, and we're going to go down a bit further, guys, at 89, the 9 pip stop, which is the ATR, to close that gap under the 32% Fibon. And we're looking for this market to rise up just to come out onto the 1 hour view. We've got we were mentioning yesterday about we're going through yesterday with a mentoring session talking about using Fibonacci principles and how consistent they are on large markets. And this is a 32.8% Fibon retrace. And if the market is very, very bullish, then we should get a rise off that, which will be a double tap bottom here, and to close that gap. And then we'll be looking for the market to push up into an attack, the Camarilla breakout long. We do have a sell zone here. My preferred area, the sell zone is 93.60. I did put that in the edge, I believe. Risk reward, high target of the day, C-ball, look to sell. This is what happens when I'm trying to write the edge and trade and host a live trading room at the same time this morning. So apologies if anyone's watching this on YouTube and they're looking at what the hell Steve on about. It means sell. Look to see sell in the range of 93.37 and 93.60. Keep trucking, hiya Pep. Did you get a chance to did you get a chance to look at the audio files that I posted? Any use to you while you're trucking? Oh, right. Sorry, you can't communicate on the. I've got a list of everyone that's in the room and everyone that's in and the people that are talking on YouTube. Sorry, I forgot. You might be just trucking and you won't be able to respond maybe. Right. So what we're looking for, we're looking for this rise to close this gap, which is a market inefficiency. We're looking for the market to demonstrate that it's pretty bullish today. And we're looking for the buy into Camarilla breakout long. And then we're looking for a sell as high as possible today. So what we're going to be looking for, guys, today is an opportunity to put a put option in, ideally before 11 o'clock today. And I'll just have a look and see what the put options are just at the moment. Indices daily, let's see. ideally, we shouldn't be a lot lower than camera breakout long today. At the end of the day, 33, 9330. It's 45. 9330 is 45 at the moment. And I expect the market to rise up later today. So for the guys in the room looking at puts, I'll just put this on the screen. Pardon the pun. Put it on the screen. You can see 9337, 93350, 93360. You're looking for 25 or under. So 330s, they're at 49 at the moment. And it's like we've got absolutely no flipping chance whatsoever this market coming up to that level. Looking at how the brokers are pricing things. We've been stopped out on the FTSE. It's going to come further down. Right. So could we put a very cheeky one in for 9,300 for a call while the market's trundling down here? I'm just looking at a put option, a call option, sorry now, a call option to go up. So if you want to do a call option, guys, I would say 9,300 could be quite a nice one for later. I expect the market to be squeezed up today to then be sold off because it is EOQ. For all the guys in the room, you know what end of quarter is all about. So I'm going in now. Just let you know, I'm going to go in with a call option for 9,300 today. Now, it's not a call option that we're going to take money on at night, for the end of the day, 9,300. What we're doing is getting in and the opportunity without a stop on the basis the market is going to get a squeeze going up, and it's cheapest chips at the moment at 7.4, 7.5. So you could have a call option. We don't know when the market's going to reverse. I do expect the market to reverse. So you could fade in at 9,300s. They're at 6.9 now. So I'm going to buy one at 6.9. So we're in at 6.91. And I will keep buying those 9.3s as and when we keep coming down. So we've got the 38.2 retrace has been blown. So we'll probably expecting, as I wanted on the DAX, I want to get this into 5 minutes. So did we get any buying pressure whatsoever? We've had a little bit of buying pressure to the top side. You can see quite clearly here this candle coming all the way down the daily close. Had some buy. If I leave that candle on here, look at the bottom right hand corner here. Immediately buying pressure came in to try and defend the double tap reversal and the daily low, but the bears have it too much here. So we might be experiencing here a bit of profit taking, institutions pushing this market down a little bit further to buy and get all the retail traders to follow them on a rah-rah only later on today to drop them completely. But we'll have to wait and see what happens. So all we can do is be what we always are, patient and wait. If you look at the rise in the market that we've had since since Friday, all that profit just on this week is sat there to be taken, and we sold some puts yesterday up here, made a killing, and sold down to the close, and we got a really nice bag of rupees there. Today, we want that gap to be closed. I'll just take this off. And we want the market to go as high as practically possible to sell it. So there's the 9,300s call options are now 7.6 still, 7.5, 7.6. Keep an eye on those. Anyone in the room getting those? Anyone in the room buying any calls? Are you, Terry? Do you know?
No, I didn't.
Yeah, I did call. I bought the call.
Right. Okay, great. I do expect that squeeze to go up. The calls now are at 8. So moving up in price. I'm going to add one more call. So now we're long twice without any stops at the moment. The stop is a degradation of the call expiring later today. So what we're looking for is a reversal. So let's just have a quick kind of right. Yeah. Okay. Right. Get rid of these colors. We don't need this anymore. We're waiting for this market to come down. We've blown the 50%, we've blown the 38%, we've blown the 61%. That would be a really nice area for the market to come into. You can see here, we've had this area, this bandwidth here. There's been a support area back in mid-September, and then a strong resistance area. And now, ideally, the market will come down towards the 61.8% Fibon, and we can buy that. That would be nice. That would be that would be ideal. We've filled the closing gap on the first attempt, but it is a market efficiency, so that gap will get closed. Today, I'm quite certain of that because it's EOQ. How far away from the gap are we now? We need to be at least 9 pips, which is the average 15% ATR, average 5-day ATR. So we do need a good reason to do if you are wanting to do the it's a difficult one. The 93 calls are now 9.20. So you bought those for under 8. So that's going, they're moving in the right direction, which is great. Whoops. Right. We don't want to see this in no man's land around at the daily low. Let's just go into this one.
Alert triggered.
A bit of a 1 minute. Right. Let's see if we can, if there's some 1 minute fractal action for that gap close. It's a bit annoying. Second fractals are always the best to take. 15 pips. We haven't got 15. It's a pin in the backside when we get these reversals. We've had an alert triggered. So the 9300s that we bought for just under 8 are now coming up for 12. So well done, just over 12, 12.1, 12.2, 12.5, 12.6. So yeah, you're going to, looks like we get over 100% on that. And it's, unfortunately, this is a trading and training room. So there we are. There, that would have been the one-to-one risk reward on not a first but a second fractal reversal, because we've got to break. You got confirmation for breaking structure for trading that. I think I will go for, this is too close to the close, pressing the button and just smashing it for the close is tantamount to gambling, and we don't want to be doing that. We can't see a one-to-one, so we're not going to trade that. But what we can trade, and we'll trade a reversal. So ideally it would be a 61.8 Fibbo, but I think the market's going to get squeezed up. That's why we did the 9300s. So they're into profit now. All the contracts are being paid for, and they're now into profit on the call options. I think with regard to market structure and the way we're running, guys, a 15-minute bars, regardless of where we are, with regard to the close, a 15-minute bar would be ideal. 15-minute bar, ideally closing over the 9 EMA, would be a perfect storm of a trade. Let's just have a quick look. We've got our runner still on the ASX, and we're looking for 14 pips on that. Oh, we nearly hit, we've done 14 pips. Did anyone take this out at 14 pips in the room for another 1%? I was going for 1.5.
No, I did.
You did. Well,
Yeah, I got that.
Well done. Well done. I haven't. I'm just thinking we've had this bounce here now, and do I want to take 0.5% and then get rid of that? So it's 8.4 divided by 14 equal. That's 0.6. I'm going to take that now, guys. Just going to take that profit, making profit on the ASX 3.2. So we've made 3.22% on the ASX. FTSE gap, first attempt, -1%. So our balance at the moment is 2.2% profit at the moment. So that's good. Four out of 4 on the ASX, various degrees of profit, and loss on the FTSE. So let's get out of the ASX. So that's done. I was hoping to leave a run in for it to run and run and run, but we've got this nice fractal movement, but this is a correlated market now. So I would like to see in this market just have a smooth run under the 9 EMA all the way down through CBOS, but it hasn't. So rather than monitor lots of things, we may as well bag over 3% on it. So that's not an issue. Oil's just triggered in. So we just have a quick look at oil while we're waiting for the FTSE to do its thing. So oil's triggered. So I'm going to get my pen out, like I always do. All right, I've already written it in. I've already written. So this structure here, for people in that are not used to the way we trade, in other words, outside of my trading room, people that are watching on YouTube, forgot the name then. Today is one of the biggest trading days of the year. It is triple witching expiry. I did put an offer out for if for people who are serious at trading, why the heck they don't join us for a month and learn the triple witching and watch what we do. I don't know. People just trying to maybe glean something online, which is great. It's great to have people here, but it's never going to teach you how to trade profitably all the time. And get an experience of a triple witching end of month trading, like the ASX, the FTSE today, the gold today, the Dow today, the DAX today. They're just super high probability super high probability trading. Crude, we just, as you can see, when markets, if you don't believe me, go and have a look at anything, this crude, any structure on crude. When you see a market that moves and then goes into a consolidative pattern, it usually breaks to the downside, especially if it's with the trend. So the market comes down, it's had enough, we're going sideways, neither the bears or the bulls are winning, and it's like everything. When people get bored, they walk away. When they walk away, they sell their long positions, and as soon as that indication is observed, then the bears come in and jump all over it, and it exasperates it, and it goes down. So we're looking for the target today. In the daily edge, we had 6,200. For the room, we have 6,200 and a lot more besides. So I've great expectations for this. We should, or well, we should. The possibility is a better way of saying it is got 1.75% possible on crude. The USD Swiss, USD Swissy, we're already in that one from the room from this morning, and I would say we're 14 pips target, 14 pip stop. We're nearly at our full 1% target, so take your stop to entry down here, and the ultimate target, of course, is 79.14. But if we can get a quick cheeky 1% before a potential double tap reversal here, that would be really, really nice. We're 7 pips up. I don't want to drop it to 14, but I will drop it to 3, 6, 9, 12. I will drop this to 3.5. Just being greedy, not being greedy, it's about managing your risk. So if it all goes Pete Tong, we'll make 1/4%. If it comes down to the final solution for this trade, then we'll take a full 1%. Whichever comes first. Really happy. We're already 2.2 up. Right, let's go and have a quick look at the DAX. So we hope the DAX hasn't been closed. Take that off. We wanted the DAX to come all the way down here. That was the alert triggered. Pain in the proverbial. We're not getting some really good price action today. I was hoping for Utopia double tap price reversal here, but it doesn't look like we're getting that. Drop into the 5 minutes. We have a right. I'll be doing a video probably tomorrow on this. This is using the 9 EMA on the 5 minute chart to trade. Very powerful way of trading, but you've really got to be on the screen to do it. Rather than doing what I'm doing is we're trading 4 assets at once, all concurrently. So difficult. Is anyone trading the DAX in the room at the moment? No? Okay. But, you know, unfortunately, we've got quite a large volume on that bar, and ideally the bears will push it down a little bit further, and then we can get involved round about camera. Between the daily low and camera, the breakout short would be perfect. But it looks like it's going to close that gap, and we need a 1-to-1 and at least 34 pips away from that close to be able to trade that. So that would have been a 34 with 68 pips. That would have been a stop down here, and that would have been your rise trade to close the gap. So I'll mark that in just to show people. 34, that'll do the 34. What the trade would have been. I didn't personally do it, as you know. Well, that would have been the trade, which is an ATR stop and target, which would be a rise trade. So what happens is the market comes down, meets the criteria for being an ATR, a 15% ATR move away from the stop. Whereas I'll just show you the charts that we use. Actually, the charts that we actually use are on the daily edge. So there we are, 34. So if you're following, now here's one tip for guys who have come on, either they've been here for a while or they're just for the first time on YouTube. If you see somebody trading an index and they do not have pivots on their screen, walk on by, because they don't know what they're doing. Every professional trader needs to, especially indices on cash markets, so any cash market, any index, if they do not have pivots, then they're just after your subscription and after advertising, because they won't be able to trade. It's like flying blind, not having pivots. Professional traders have pivots. If you don't see a cash pivot market structure on someone's chart, walk on by, because they don't know what they're doing. You absolutely need them to trade, otherwise you're blind. You just do not know what's going on. It's just in free fall. And any amount of highly productionized video or slick talking ain't going to do anything. It might convince a few people, but you know, you're in the open air. You need to know what the professionals are doing. You need to know what institutions are doing, because they're the guys that move the market. And if you don't use pivots, you're screwed. If you don't use pivots, don't trade the cash market. Simple as that. I think we will have to run for a 15-minute bar on this, because that's too close. We can see if it actually did work. I'm assuming the market will rise nicely for this. Looks like we're going to get maybe a double pipe here to trade off, but we do need the market to give us a signal. We do not trade on feel-good factors. We trade on facts, non-emotions. Setup has to work, otherwise you do not press the button. Again, this setup earlier would not work, so we're too close to the close, so you just don't trade it. Just walk on by. This one, the market dropped far enough down to get our ATR rise trade. And there's the ATR rise trade. We're going to keep the alert there. If the market comes back down, and we'll put the alert on the close here. And we've got, how long have we got? We've got 14 minutes left on this particular bar. I'm just going to put a timer on my clock. I use my phone all the time to time trades, give me alerts. We've got 14 minutes left on the life of this bar. So at 13 minutes, we'll have an alert set. As you can see, I have alerts all over for my trading, so I can trade multi-markets at once, have a top alert, a bottom alert, and a timed one, because I want to know what's going to happen with that particular candle. FTSE, that's the one that we're looking at. Right. So again, there was the FTSE rise. We've got a new fractal on 5 minutes. It's still not a one-to-one. Quite interesting here, looking at this structure. I'll turn the fractals off for the moment. Observations here. A rule, hard rule. We use a 200 EMA to determine trend on every time frame that we're trading. But more importantly, when we're day trading, we want to see the 200 EMA and the 1 hour 200 EMA both going in the same direction. in relation to the price. So if we, on a bull market, want to see the price above the 1 hour and 4 hour 200 EMA, that's trend. The indication that is very powerful and to be used for price direction is a 9 EMA. So whilst we have the trend up and positive, we've got price action negative. The market is failing to close above the 9 EMA. And while it's failing to close above the 9 EMA, it's giving you an indication the market is going to continue coming down. So if we had traded that 1-to-1, this is, the stop is potentially at risk. If we had done that, it's too close. If we had done that, it's too close. We needed 9. I think was that? I think that must have been 9, wasn't it? Yeah, roughly 9. Yeah, 9. While we're trading under the 9 EMA, this market is telling you it's just not ready to revert back to the trend. It's just coming down. Just having a quick look at USD Swiss, we're 6 points up. Oil, we are 8 points up. We haven't had a look at gold yet, have we? So hopefully we'll refresh the screen and see what's happened with gold. So we've got a timer on the DAX for a 15-minute bar reversal. We've got alerts top and bottom. We know what we're doing with crude and got alerts on there. We know what we're doing USD Swiss. We've got alerts on there as well. And we've locked in 0.25% profit as well. And now we're waiting for the FTSE to do something. And at the moment, although we are bullish at 5 minutes, we're not bullish because we are trading under 200 EMA and we're trading under 9. At 15 minutes, we are not bullish at all, either with price action or the trend. And this is where the market starts changing. On the larger time frames, we are bullish all the way to 92.57. We are negative on price action. So while one contradicts the other, at an hour especially, you don't go along unless there's something, a reason for you to go along. And at the moment, there actually is, in this case, there actually is a magnet, the pivot, the close. So we've got a closing gap to close, where the market makers will be trying to close that gap. The closing gap is where the market finished trading the previous day in cash hours at 4:30. So we're now trading cash hours again, but there's a hole in the market that still hasn't been resolved. And the hole in the market is here, from the close to that level here. This level here. There's a hole in the market where there's been no cash receipts. That does need to close. I'm sure it will close today. So on the 15 minutes is where we generally do our trading, 15 minutes and below, unless we're doing drop trades on the 1 hour or a 4 hour reversal. Generally, we're 15 minutes, 5 minutes, sometimes lower. But here, really, you'd be wanting to trade a... Where's my pen? That's me. I've got my magic disappearing pen. So here, ideally, you'd need a 15-minute bar trading above here would be perfect. The trading above the 200 EMA. And ideally, once the market finishes its route to then go up a bit, we would also be trading above the 9 EMA. That would be a perfect scenario, perfect storm. Just got to be patient. And that's the worst thing for trading, isn't it? Being patient. It's easier to hindsight trade. It's difficult waiting for the next candle and then the next candle and so on. Perfect storm would be this market will drift all the way down to the 61.8 Fibon, and then we'll have some of that. And you can see quite clearly on the 5 minutes, markets are just, the price action is just under the 9 EMA. Got no interest in the 9 EMA, none. Going to put an alert here on the 9 EMA actually, in case market decides to break. And let's go and analyze and have a look at gold now. So oil's up 7 points, USD Swiss 7 points, both in the money, which is nice. Gold, absolute monster trading on the gold. We've had some fantastic trading on gold. 4 trades already on gold this morning. Gosh, can't remember how many trades we've had on gold. Gold's up, must be at 43% now. All-time record highs. So what we're doing yesterday on a mentoring session, we're doing some refresh on, because gold is traded very highly on Fibos. Lots of Fibo traders on gold. So we need to know what they're aiming for. And the ultimate target that they are going for is, can I put this up now? Put your expansion tool on, go into here, first phase or wave, bring it back down for the pullback, boom, 38.80. And that is the target that we've got for today on the daily edge. So daily edge. So if you've seen this for the first time, this on YouTube, I really don't understand why people don't have the daily edge, because I've been doing it for 3 months now. It's lost 1 day. I published how good it was on YouTube. There's a video on it, but it's the last time I'll be published on YouTube. People don't like to see other people win money or make money. So it wasn't received particularly well. There's a few people that give it a thumbs down, because all I was delivering was facts. But some people can't deal with the truth, really, I don't suppose. And really, the daily edge is for my room and my traders. We all know it works. It works extremely well. And if you had been following it and trading what it actually says, you've probably made money for 3 months on the bounce. But hey, don't believe me, I'm a YouTuber. But this is for real trading, for real traders who are really interested in making money. I think it's about £2.50 a week, something like that. Tells you exactly what's going to go on. Where's gold? Buy gold. Oh, yeah, where's gold? Yeah. So yeah, there we are. 38.80 is the
Alert triggered.
Is the target. So we've got an alert triggered there. We need to just go and have a look at that. We'll come back to gold. So I want to show you the analysis. That is the ultimate solution today. 3880, which is an impulsive wave, phase 1, pullback 2, and a 1 to the next target. We have hit the expansion targets, and here this is showing you how to get back into the market halfway through a phase wave. Okay, what's that trigger? Well, whether you can hear it or not, I'm not really sure, but alert status verified. Germany coming further down. So let's go and have a quick look at the DAX. And then we'll come back to gold and show the analysis on gold. Right. Into the 5 minutes, let's put these EOD cash pivots on. So show them, put them on. So this was the ability to do a minimum 34 pip ATR. Now that rise trade, and that is the absolute minimum you would need. Where can I put the? Oh, here it is. This is a chart. This is the minimum you need away from the DAX. The perfect distance is 68. The FTSE minimum was 9, best is 19. And you can read that across all the different indices. Okay. So would that have been stopped? We didn't take it. Would that have been stopped? Will it get stopped? Well, we don't really know. What we are waiting for is a 15-minute bar. So we're into the levels now of interest. We just need to get an opportunity. I've left enough to one side to put one more call option on if the FTSE comes down lower. So that would be quite nice, but we'll wait and see. So I'll just turn my alert off. It's 40 odd seconds to go. We're actually on the DAX anyway. Can we put an alert if it's going to rise again? We're looking for a 15-minute bar. That's what we're looking for, because we're a little bit too close to the close. Let's just have a look here. What I'm doing now is looking at this price. I'm looking to see how far we are away from the closing gap, and that's 43 pips. Perfect storm would be 68. But if we have got to stop under CBOS, if 43 takes us below CBOS, so that would be 86. That's getting pretty damn close to being okay. Actually, it is. So we get put an order in here. Now this interests me. 41 pips, 82 pip stop. Right, yep, 41 and 41, guys. I'm going to officially go in on this trade, 41 and 41, for a 1% trade on a rise trade here. There we go. Just round that number. The reason I've gone for this, okay, is because this takes us... Oh, I thought it did. My math's not brilliant. I wanted to be under Camarilla breakout short. Take that off, guys. It's me not doing my maths correctly. The perfect position here would be to have a stop under Camarilla breakout short. So it needs to be really... We'll just keep a watching brief on this. We're just measuring this all the time. We need to be down into 55 and 55 away. It doesn't quite make it. If the market keeps coming down a little bit more, then yeah, that's a pain. I thought was gonna get a nice low trade here with a stop under camera under CBOS. We do need to stop under CBOS for this. The other thing, of course, is you could have a trade for a longer term period, which is taking a trade now with potentially taking some heat, but you'd need to be under CBOS, and you would be going for a Camarilla breakout long hit for later in the day, and that would be a fire and forget. But we're just using support resistance stuff here. 55 for 135 target. I'll do this myself. I'm not saying you can do it yourself in the room. I'll show you that for this because we'll do the illustration. We're going to be on at 3:30 this afternoon just to show you how that works. So I'm going to hit this button now. Am I going to hit the button now? What I'm looking for here, guys, is if we can get any more value, then we can currently score on here, which is that's if you keep it at 55 pips, get ready to smash that button. I'm just waiting to get as low as practically possible. It's better than the 135 pip target. We're looking for over 2% here. But let's get this how far will this market come down? I think I'll be quite happy just to buy that there. If we can get that, I'll be happy there. The thing is, we want to be away from Camilla breakout long. We want to go to a good 8 pips away. People usually put 3 pip stops, 5 pip stops. We need to be out the way in case the market sweeps us out. So you got Camilla breakout short here. So, of course, there is a trade on this as well. Can anyone tell me what the trade is in the room?
Cam trade.
Absolutely. Absolutely, yeah. We can set that up now. So the cam trade would be 34 and 34. If we're going to do the cam trade, and the cam trade is relevant. On the 1 hour, it's right on CBOS. We've been filled now, so we can still put the cam trade on. If the market does come down, then we'll have some. CBOS is 23,652. Call that front run that one. That will do the job. So we're not likely to get the cam, but just in case, let's put the cam trade on. What we're doing here is going for a larger trade. So this one, the trade that we're in now at 135, and the target is 23,837. So we are in on the DAX, and just write this in, at 23,687, 55 pip stop, 150 targets. That's over a 3% trade for the market to be squeezed up later today. And we can put some alerts on this and put it into the detail. So that would have been the rise trade. If people had done the rise trade, we have done the actual rise right at the bottom here of where the resistance starts to come in on a 1 hour. We've got a cam trade put in, ready to go as well, just in case the market comes down later. If it doesn't, then we'll cancel the cam trade. So that's DAX. Hopefully set for a 3% trade. If you want to close the gap, then if you can see a 3-minute fracker on the DAX works well on a 3-minute fracker early morning. If you can see a 3-minute fracker to close that gap, just doing a gap trade in a 1-to-1, 1%, then that's good. You can see the market came up above the 9 EMA here, produced a fractal. That breakout would have been a really nice trade, but in the way is the close and the daily pivot. The close is a magnet. The pivot boys will buy up here, so it's probably could be okay actually. But we're now set for a 3% trade. If you are a DAX trader, then you can take the second frac that is formed. This is the first fractal off a key area, which is the 1 hour reversal here, and you can look to go for a 1-to-1 risk reward into that close. If you'd done the rise trade here, that's where the rise trade would have been. That's where the stop would have been. But we don't need to do that now. We're already in. It's looking quite nice from a price action point of view, but it did before as well. And this time it's a triple tap on the bottom at this level. So we're right in the weeds in micro management. Let's look at the FTSE. Can we get a call on the FTSE? I'm still waiting for the 61.8. So I've got one option left that I can take for a call. Oh, I've not looked at the... Has anyone been typing anything in? All right. Yeah. Action's a little bit slow today. We are expecting things to come crashing off, but we want to come crashing off from a high squeeze. So crude still up. Has USD's, I think USD's has hit our 0.25%, I think, is it? Yes. USD Swiss, we've got an alert for the market coming down a bit further to put a call option on, and then a 15-minute bar reversal. So USD Swiss, this is where we manage our risk. We've had the market just pull back a wee bit. People have bought into here, seeing this confluence and looking for the market to go up. But let's just have a look at the Dixie and see the strength of the dollar basket at the moment. The dollar basket should be on the way down. So here's the overlay. This is a dollar basket. So you're looking at the strength of the dollar. Strength of the dollar is certainly down on the 1 hour, and it looks like the market's set to continue to go down. Let's have a look on the 4 hour. Dollar basket's here, coming down. So this market is set to come down, but when we are sat on profits, so we put another to 0.5 to 2.7, we're up 2.72% now. When we're doing that trade, when we've got profit in the pocket, then we want to keep the profit in the pocket. Market coming down. Yeah, this is certainly set to come further down. You can see we've had a bit of indecision. Markets pull back up. You can see that into the 5 minutes. This could easily just be a phase wave. What I mean by that is we've got wave 1, then a 2, and then another 1. Potentially another 2, another 1. Do I want to have a go at that again? I think what myself personally, you can still trade that on a 5-minute fracker, guys, but I think I'm going to now wait for a full duck alignment on the 1 hour. So we've got the market off this confluence, bounced off, and came back up. It's all lower highs, potentially lower lows. In the next 3 minutes, it might be just drop down, but it doesn't look like it's going to. But there's the 200 EMA on the 1 hour. If we break this structure, it opens all this up. So we'll take the money that we've made and we'll wait. So let's go back to gold while we've got time to. So again, we were talking about the different phases and the fibos as particular targets to go for. And then we talked about the ultimate target being up here. But that was about using fibs. But as we got down into the detail, where were we? Let's get this here. So we were looking at the market. These are the retraces, right. Okay, so we were up here. We were up here. This is yesterday. Where were we? No, we weren't. What time was our 1 to 1? 10, 10:15. So right, this was it here. So we drew all these Fibonacci's in, and it's where we're at all-time record highs. What do you do? And this is, we were talking here. And I remember, I think it was a triple top on the 1 hour. So here we are there. That's it there. The trip there and not and there. That's it. No, quadruple top. 1, 2, 3, 4. Right. Okay. So we were here yesterday morning on a mentoring session. Where does the market go from here? Well, the market has got some very distinct areas to go for. We're marked in the Fibonacci 61.8 extension. Quite clearly can see that all the Fibbo boys were heading for a 61.8. It's quite to the fractals off. It's absolutely clear that the markets, as it's come up to here, people have been taking profits, not wanting to go beyond the 61.8. This is a Fibbo level. And the Fibbo crowd are just not interested. So what we're looking at is looking at retraces where this market could come down to. What I'd said is a general bullish market, you'll probably see a 38.2. A perfect storm would be a 61.8 Fibonacci retrace on the 1 hour. That would be the perfect storm. If the market is very bullish, then you'll see buyers come in at the 23.6. Okay. So the rule here was do not trade high until you break out of that level. Or if you come down to this level, you'd be possibly looking for a trade. And the only trade that you can possibly do would be a 15-minute bar, so long as you can complete it within that rejection level, or a 5-minute fractal. Let's go back to that data again. So here we are. So this is this confluence, this turn, as you can see, it's now confluence. So we were wanting the market to either break here to come down to 32 and take a 15-minute bar, or we're waiting for the market to break out of here to actually trade. There is nothing to see in here unless you're very proficient with fractal trading, or as we explained before, and we traded silver live with Rory's gone now. He's left the room at work. I was showing him how to do the 5 EMA live. We'll have a look at gold. We might be able to see it might be left on from yesterday. Basically, that would be a trade of a Heikin-Ashi, has to be Heikin-Ashi, nothing else. On a bull market, and trend is great. Price action is great. So what you do is you go for a 1-to-1 risk reward if you can get that within this area, and then leave it alone until it's broken out. As you can see, that would have worked. The rule is on 5-minute trading is you're in at that break of the bar and you're out when the market closes here. They are. So you would have risked, how many would you have risked? You would have risked, I will do the video, but the most important thing to me is my trading members and helping them to trade and understand the strategies. Unfortunately, it's not YouTube, but when I get the opportunity, I will do it for YouTube. But the important thing are the members who really want to learn to trade rather than just watching on video. So that was a really good opportunity there. Delete ruler. So the rule was a break out of here, put it into 15 minutes. So you are going to take a break of here. So the break of here on a 15-minute bar is, there's the break. Quite clearly it's a break. Quite clearly it's a fractal break as well. So you could have took the fractal break here. Or if using the 15-minute bar, the stop was under the swing low here, of course. A breakout there. Easy target. The thing to watch out for is the next fibber, which was a 78.6. So the 78.6 was here. Market move. Quite clearly, you can see the reaction here around the 78.6. There always is. And people have been, the market is absolutely full of trigger fingers. People who just cannot keep the nerve. And what they do is they pull the trigger early, pull the trigger, snatch at profits. These people usually fail as traders because, you know, it's death by 100 pinpricks, really, because all they're doing is snatching profits at less than a 1-to-1 risk reward. When they lose money, they lose 1%. When they win money, they win 0.7 to 0.8, 0.9. So over the longer term, the account just gets depleted and depleted. So eventually they blow the account, or they learn. And the only way to learn is to get a mentor, get a group of people that are as good or better than you, so you can learn off them and get consistency and support in a community. So market, so that will get hit. This is all the retail traders taking profits, all the trigger fingers. So all we're going to do is sit in our hands, wait for a retrace. There is a technique here as well. I'll show you the technique now. So I just wanted to explain all that to you very quickly before I show you this technique. I'll show you what we did. It was Rory, I think. Rory. Where's Rory? Rory. That was silver yesterday. So we were trading, as I mentioned, the technique of how to get a 1-to-1. And that was the 1% that was done. And I showed him how to do it. We traded live and then we ran out of time for the mentoring session. Both had things to do, but it did hit full target. Let's just have a look, see what actually happened to it all the way. There it is. That must have been it yesterday. Yes, that was it yesterday. So we were trading that and just showing the technique on. So that was the bar there, a break of that bar. So we're just showing how to get in on silver and how to get in halfway through anything. So long as you are trading above the 9 EMA, you're either going to go for your 1-to-1 risk reward, or you're going to get out when the market reverses against you, which is that one there. So even if so that was the bar, if you'd got in, as soon as you're trading above that bar, and then you could have used the bar rules and out here. So you wouldn't have got 1-to-1, you'd have got 0.5%. And then a retrace down. There is another opportunity there to trade. That one actually would have lost. That one. They don't always win. There's another one, obviously won. Gold. Right. So that will clear all these objects off, but one of the techniques here is a 15-minute retrace. So what we're looking at here is the law, and one candle does not count as a law. It's got to be 2 candles or less, or more, sorry. So what we'll do, we'll draw fibber on here, the low to the high. And what we're going to do, we're going to identify 78.6 here. I'll get rid of that expansion tool. We'll do this live. And a 50% is here. So what we're going to do, we're going to put an order in for a trigger at 78.6. And we're going to go for a 50% retrace. So that's 13.2. So we're going to look at 13 and 13. And I'll just put that in now and I'll show you 13 and 13. So we're going to go 78.6 trigger there. And you can see the low is here. So what we're looking for is generally if, oh, it's shit, that's gone short. It should be long. Sorry, go straight long. Sorry about that. Why I had it set it short, I don't know. So, and we've got a little bit of a slippage here, 848. We'll just leave it like it is. It's real trading. So what we're looking at here is we're looking at generally if a 78.6 Fibbo holds, then you'll get a reversal. And reversal is a 50% retrace level of the overall this overall Fibbo move. So a market back up to the 50%. Triggered at the 78. If 78 doesn't hold, then generally you can observe a 100% retrace. Our stop is under the 100% retrace because we're going from 78.6 Fibbo to 50% on a one-to-one risk reward. Where's the retrace? There's a Fibbo there. So that's the trade. Roughly, you can see roughly that. Well, the Fibbo's further down there, isn't it? So I can write the Fibbo in. I've got my mouse to snap 83.35, 83.35. That's it there. So that is the one-to-one risk reward. And it's just one of these things, high probability trade. They do not work all the time. You just got to be emotionless in the application of the trade. And all you're looking for is the Fibbo boys to come in and defend a key Fibbo level. That's what we're looking for. And we're looking for a small pip movement to give us a 1% trade. That's what we're looking for. Let's go back to our indices. I'll put an alert here. The market comes down and we'll put an alert if the market hits the target, which is here. We'll have a quick scoop round because it's 9:10 now. We want to be over and done with, really, as far as live. Right. Right now we're cooking on gas. So now, guys, we're going to put an option on, our last option at 9,300. At 9,300, let's see, options, 9,300. So we've got those at 4.5. Nice. Boom. So we're in there now, 9,300. And now what you're looking for, once we, I don't know why that alert never went off. So you can see how it's bounced off the 61.8 front run of CBOS, which we should be putting a CBOS trade on there just in cases. And the CBOS trade would be 9 and 9. Just in case we do come down, 61.5, 62.5, front runner 1 pip, that's it, there we go. That's just in case you come down, we'll hit our cam trade, system trade, do it every day if it sets up. And what you're looking for now, we've still got a closing gap, don't forget, there's that market here. Now we want our stop on the CBOS. Now we can do quite a nice rise trade here because we've got how far away? A good 20 pips away. And from where we are now, we could do a 2020. Very nice. From here, we can hit 2020, guys. So if you want to do a rise trade to close that gap, it's going to be roughly 2020. The stop's going to be 20. And I'm thinking we just do it. And that's the rise trade into that closing gap. Just over a 1-to-1 risk reward. And now we're under a key level. The market has come down. Stops are under Camarilla breakout short. We've got the protection here. The market did come down to the 61% Fibo that we needed it to. So the market is complying. We now need the market to start the buy. Now, if you want the confirmation, then it's a 5-minute fractal off a key level, or it's a 15-minute bar, whichever comes first. And then we've got, if the market does decide to drop a wee bit further, then we've got the Camarilla breakout short cam trade. Right, DAX. It's a shame we can't do updates for the live room. It's a shame it won't allow you to put charts up and that to show where the trades evolve to. And then if you've been in the live room, then you can see what's happened. But if you're in the live room anyway, you've got this recording and you can go and have a look at how well we did. But we're looking for a monster day today. Well, we're up 2.72%. I would like to think we can be somewhere between 5 and 10% today. Would be really, really nice thing to try and do. We're a few rupees up on DAX, but we are not out of the woods. We've not got any clean breaks from this key area to go along. In other words, we're trading under the 9 EMA. So we want to keep this now at 15 minutes. Long tail, long rejection tails, people really not wanting to participate into this area at all. So it's a 15-minute bar, and that's going to take at least 30 minutes more to set up. But if you can get a 15-minute bar, then you still got a closing gap to hit there. And yeah, quite nice. Be quite interesting if this is the bottom of a tail, the market going back up. So we've got these progressive lower lows and then starting to put higher highs in. These aren't ring lows, not 2 ring lows, because they're not flat bottoms. So we've got 3 calls on the FTSE. We've got a cam trade set. We are in long on the FTSE already now. A 15-minute bar, we could add to that. If we get a 15-minute bar, we could add to that so that we're triggered into the FTSE. So we can relax all the charts out now to 15 minutes because the market's open. Be quite interesting actually to see where the initial balance is. And put both of them in that people like to see. One of them is the opening balance, opening range. So the top of the opening range is here, and the low of the opening range is here. We are positive, so I would tend to only trade to the top side. Now, we do know the opening range is best traded in 1 hour, not 30 minutes. So it's not really an orb strategy. Don't believe all the characters on YouTube that tell you the orb's fantastic. It isn't. We've proved it statistically that it's 60% at best. Rubbish. You can take it to 80, 85 if you use fractals with it and only trade with the trend. But the orb works best on 1 hour. which ironically is the initial balance trade, not the orb trade. So if you look at the low there, so what you're really looking for is the initial balance range of the first hour traded. And what you really want to do is to be trading out of that break, out of here. That's where you want to be trading, or you want to be trading off the bottom of the opening 1 hour range. And we need a technique to do that. Techniques to do that would be fractal trades. I'd like to say that was gauged, but it isn't. That is a fractal break up the second, and you don't take the first, you always take the second to make sure it's okay. That is the fractal breakout. Your stop could be under there, and that is going for the initial balance bounce and then a breakout of here and tackling up here, and then we're going to shot the backside of it. That's a technical term, by the way. DAX. The DAX is what the DAX is, and you're looking for a 15-minute bar to complement the trade that we're already in, and we're on we're coming up towards 0.5%. The gold, we're in gold. Where are we in gold? We're up 1 pip only on gold, and we're looking for a reversal on gold to get a cheeky 2% out of gold here. Crude, and then we're going to go crude's getting a wiggle on. It's now dropped out the bottom as we suspected it would, and that's running on down there. Any questions before I go, guys? No, everyone's happy in the room.
Yeah, all good.
Okay, I'll just tell it. Okay, thanks for watching. And by the way, if you want to, we are trading from 8 o'clock. Where is it? We're trading from 8 o'clock today. I'll just check it is 8 o'clock, and we're going to be streaming live the well, we're doing the FTSE, of course, at 3:30, but we're not streaming that one live. We're just going to do it privately in the room. But we are going to be, here we are. Where are we? Where are we? On the site, if you want to come in tonight and trade live. Where are we? Where are we? It's this one here, there. Clock onto that one. That's the power hour. We're going to be trading this one live tonight from 8 o'clock through, yeah, from 8 o'clock. 8 o'clock through till after 9 o'clock. We'll be trading anything we can get our hands on, but really focusing on that big Dow sell-off we're expecting tonight and the DAX. So if you want to join me then tonight, please do. There's obviously some people interested in it already, but that's what we're doing. All right, guys, I will go and see you on YouTube later. Bye-bye.
Thanks, Steve.
Right.
Thanks, Steve.
Cheers.
In the room.